Coming up on Market to Market, the Obama administration says agriculture will play a key role in an economy that's built to last. Latest estimates on domestic agricultural supply and demand prompts little reaction in the markets. And America's First Lady urges Midwestern youths to eat nutritious foods and get plenty of exercise.
Let's move!
Those stories and market analysis with Naomi Bloom next.
Funding for Market to Market is provided by Pioneer Hybrid, which supports efforts to help families pass their farms into the hands of the next generation. Pioneer, science with service, delivering success.
This is the Friday, February 10 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mark Pearson. When determining the outlook for investments, savvy investors often point to the Greeks. Technical indicators like delta, theta, and alpha that quantify factors influencing the markets. This week, though, the Greeks weighing on equity markets were 11 million people in Europe at risk of defaulting on their national debt. U.S. stocks rose Thursday after Greece announced plans to cut spending and avoid defaulting on its debt next month. The news pushed the Dow Jones Industrial Average to within 75 points of 13,000 at one point, a milestone it hasn't reached in nearly 4 years. But the rally was brief. U.S. stocks pulled back Friday after finance ministers from the 16 other Euro nations insisted that Greece enact more rigorous austerity measures and guarantee their enforcement after planned elections in April. Many economists are concerned the European debt debacle will weigh heavily on the U.S. economy this year. But data released Friday revealed U.S. exports to Europe rose 7.2% in December in the wake of a 6% decline in the previous month. Total U.S. exports increased 0.7%, but imports rose nearly twice as fast as U.S. consumers bought more foreign autos, auto parts, and industrial machinery. Cumulatively, the numbers resulted in a U.S. trade deficit of nearly $50 billion, reflecting the largest monthly trade gap since June. American agriculture, of course, enjoys an all-too-rare trade surplus. And a key member of President Obama's cabinet traveled to Iowa Friday to outline rural America's role in an economy that's built to last. Secretary of Agriculture Tom Vilsack carried President Obama's State of the Union message of economic recovery to the heart of the Corn Belt this week. Vilsack met with local business leaders and producers in Iowa at a roundtable event aimed at supporting rural communities and a growing agricultural sector.
Obviously, we're seeing record income levels for farm families. This was the best, 2011 was the best year we've ever seen in terms of net farm income. Even if you adjust those numbers for inflation, it's the best we've seen in 40 years.
The Secretary lauded the farm sector for its impact on America's slowly recovering employment rate, which he added is buoyed by everything from commodities to biofuels.
All of those activities also have impact on job growth. If you're basically exporting more, that means more is being shipped, more is being transported, those are jobs. If you're involved in more conservation, that means local contractors are moving dirt, creating buffer strips and things of that nature. If you're engaged in the bio-based economy, biorefineries are being built, small manufacturing facilities are dotting the landscape. That brings unemployment down, and interestingly enough, the unemployment rate in rural America coming down at a much faster rate than any place else in the country. So good farm income, good jobs, good news.
Vilsack's visit to the heartland coincides with a Commerce Department report signaling strong agricultural trade figures in 2011.
Nothing but good news. $136 billion of exports, many reasons for it. Part of it is a strategic focus that we've created at USDA in the last 3 years on exports. Virtually every commodity, grains, hogs, dairy, cattle, cotton, all at record highs. And obviously the importance of China and the export opportunities to China grow tremendously. We're now our number one customer.
In 2011, the multi-billion-dollar Chinese market surpassed Canada to become the largest for U.S. farm exports. The bullish sign for domestic commodities has come on the heels of a Chinese corn buying spree. Since September 1, China has purchased 2.39 million metric tons of corn, up from only 313,000 the year before. China's exploding population and expanding middle class is creating a wealth of new demand for U.S. producers of grain and meat. Increased agricultural exports to China are a welcome development in an otherwise dismal trade picture. In 2011, the overall trade deficit with China climbed to an all-time high of $295.5 billion. up 8.2% from the previous record set in 2010. The overall trade imbalance is the largest ever recorded with a single country. Despite strong agriculture demand with our Asian partner, Vilsack cautioned that U.S. farmers and ranchers should not rely on one country for exports.
You still want to have a diverse portfolio. You don't want to be over-reliant on one customer because that customer can pull the rug out from under you. So it's great to see that we continue to have export opportunities with Canada and Mexico in our own hemisphere. Very good customers. We're beginning to see expanded opportunities in Japan.
USDA's Vilsack remains bullish on the ag sector and emphasizes the current trade climate is part of an Obama administration plan to recover from the worst economic downturn since the Great Depression.
So we are making progress. We still have more work to do. The President has challenged all of us to double exports in 5 years. He knows that's one of the key prescriptions to bringing the country back and having an economy that's built to last.
According to the Centers for Disease Control and Prevention, childhood obesity rates have nearly tripled over the past 30 years. And today, nearly 1 in 3 children in America is overweight or obese. The numbers are even higher in African American and Hispanic communities, where nearly 40% of children are overweight or obese. In addition to increasing health risks, America's ever-expanding waistline poses a serious threat to economic vitality as well. And the CDC estimates obesity added $147 billion to the nation's healthcare costs in 2008. The epidemic of obesity, particularly in children, is a key priority for First Lady Michelle Obama. And this week, she called on thousands of kids to eat nutritious foods and get plenty of exercise. Laurel Bauer-Bergmeyer explains.
It is my honor to introduce the First Lady of the United States, a fan of our Healthiest State initiative, and the driving force behind Let's Move, Michelle Obama.
First Lady Michelle Obama kicked off a national tour in Des Moines this week to celebrate the 2-year anniversary of Let's Move.
Oh, this is so cool! Hey!
Let's Move is a comprehensive initiative launched by the First Lady in February of 2010. The effort is committed to solving the problem of obesity within a generation so that children born today will grow up healthier. The program encourages families across the country to commit to healthier living.
This is a huge day. It is a huge day. We are celebrating the 2nd anniversary of Let's Move. And we could have had this party anywhere in the country, right? We could have gone anywhere. But there is a reason why we wanted to come here to Iowa to be with all of you.
Mrs. Obama chose Iowa as the first stop on her tour because its governor is leading an initiative to make the state the healthiest in the nation by 2016.
This Healthiest State initiative has inspired Iowans, young and old, to come together and make wellness a priority.
More than 10,000 children grades 6 through 9 joined Mrs. Obama, Iowa Governor Terry Branstad, and several celebrities to celebrate the 2nd anniversary of Let's Move.
From the hit show, The Biggest Loser, please welcome Bob Harper.
How's everybody doing?
NASCAR racing champion Carl Edwards and Olympic figure skater Michelle Kwan.
Hi, everybody. How are you guys today? Good. There's a lot of you here today.
For the past 2 years, the First Lady has led the charge for a healthier America, partnering with parents, businesses, educators, elected officials, athletes, celebrities, child care providers, and kids themselves to try and improve the health of the nation.
When it comes to eating right and exercising, you guys, it's important for you to know that all of you are old enough, you're at an age where you can make good choices for yourselves in your lives. You guys are in the position to do that now.
According to the First Lady, obesity rates in America's children have tripled over the last 30 years. The numbers are even higher in African American, Hispanic, and Native American communities.
I mean, one thing I know is that when I exercise and I eat right, I always feel better and I always have more energy. And my husband is the same way too. You heard of my husband, right? That guy, the president? Well, It's important for you all to know that he works out at the gym almost every day before he heads to the Oval Office, every day. But let's be clear, you do not have to be the President of the United States. You don't have to be an Olympic athlete to make exercise a regular part of your life.
Let's Move focuses on 4 main pillars: making healthier choices, getting healthier food in schools, improving access to healthy, affordable food, and increasing physical activity. On several occasions, Mrs. Obama has teamed up with the Department of Agriculture to meet these goals. In January, USDA released new school meal regulations through its National School Lunch and Breakfast Program.
You need to go back to your schools, and you need to encourage your schools to embrace the U.S. Healthier Schools Challenge. And what that is when your school gets to be a U.S. Healthier School Challenge school, you essentially embrace nutrition and physical activity every day, and your school gets recognized by the USDA, my department, and the First Lady's Let's Move initiative, and we give you a little extra cash bonus to the school. So I want you to go back and encourage your school to embrace that challenge. Doesn't take much, but you need to lead it.
We ready? All right, let's move. Let's get it done.
2 years ago, the First Lady began a national conversation about the health of America's children. Since then, she says the Let's Move project has made significant progress.
You've gotten off to such a great start, but I know that we have a lot more work to do. We have a lot more work ahead if we're going to make Iowa and all our states the healthiest that they can be. It's going to take every one of us working together to achieve that goal, and we're going to need all of you. Again, that's why we wanted you to come. We're going to need all of you to help lead the way. So my last question for you guys is, are you ready to do that? Wait, I can't hear you. Are you ready to do that? Well, all right then, let's move!
After leaving the children of Iowa energized with the conviction to be healthier, Mrs. Obama continued her Let's Move tour to Arkansas, Texas, and Florida. For Market to Market, I'm Laurel Bauer-Berkmeyer.
Next, the Market to Market report.
Last month, the Agriculture Department reported the U.S. cattle herd had declined to 90.8 million animals. That's down 2% from last year, and it's the lowest inventory since 1952. Economists say already high retail beef prices could climb as much as 10% per year in 2012 and 2013, and the spike could be even greater if demand from other countries increases. The immutable law of supply and demand was at work in the grain markets as well this week, but when the Agriculture Department failed to revise previous estimates significantly, the trade offered a muted response. USDA officials lowered domestic corn ending stocks by 45 million bushels to 801 million bushels. While that's only a 5% change from last month, the figure is still nearly 30% lower than last year, and it leaves little room for adversity during the growing season. The downward move, based on reduced competition for the export market, prompted USDA to narrow the seasonal average for corn prices by a dime, making the range $5.80 to $6.60 per bushel. Government analysts left U.S. soybean ending stocks unchanged at 275 million bushels after ratcheting those numbers up in January. With exports projected to be down slightly over last year, the price range has been squeezed by 15 cents over January's report to between $11.10 and $12.30 per bushel. And USDA lowered domestic wheat ending stocks 25 million bushels to 845 million bushels, as export numbers got a boost over last month. While only 2% lower than last year, federal officials increased the sales range 20 cents, putting U.S. wheat prices between $7.15 and $7.45 per bushel. The market took the information in stride, posting minimal gains for corn and soybeans as wheat moved slightly lower Thursday on the news. The report had bearish implications for the grain markets. For the week, March wheat lost 30 cents, while the nearby corn contract moved more than 12 cents lower. Soybeans followed the coarse grain south as the March contract gave up 3 cents, while the nearby meal price declined $8.60 per ton. In the softs, cotton trended lower as the March contract lost $5.73 per hundred. And in the dairy market, nearby Class 3 milk futures lost 26 cents, while the April contract moved 22 cents lower. In livestock, the April cattle contract lost 60 cents. Nearby feeders were off 83 cents, and the April lean hog contract moved 62 cents lower. In the currency markets, despite rioting in Athens and the resignation of 5 cabinet officials, the euro settled Friday with an 18-point gain against the dollar. Crude oil gained 83 cents per barrel. COMEX gold declined $22.70 per ounce. And the Goldman Sachs Commodity Index gained nearly 5 points to settle at 671.80. And here to let us her insight is one of our regular market analysts, Naomi Bloom. Naomi, welcome back.
Hi,
good to have you back with us. All right, let's talk about a lot of stuff's going on.
You bet.
The USDA report, want to get to that. Obviously, as we visit, the situation in Greece remains unstable. What do you think is going to happen?
It's very unstable, and there's actually a 6-step process
It's
that they're
been
needing to
unstable
get
now
through.
for how long?
2
A
years,
year,
at
2
least.
years?
Yeah.
I'm getting very fatigued
Well,
by Greece.
I think the whole marketplace is, and it's becoming old news, and people are frustrated with it. And what the world is needing for them to have happen is get through the 6-step process and make sure it happens, but the odds and the likelihood of it continue to become less and less and less. And so many feel it's just a matter of time before they're asked to exit the European Union. But of course, everyone's really trying to do their best to keep them involved and everything like that. But the biggest concern still is that if the Greek default on any of this payments, that the euro is going to crash, in which case our U.S. dollar is going to rally.
Mm-hmm. You know, Greek has been in default of its sovereign debt 50% of the time for 200 years. It's 0.5% of the world's economy, and it's driving our markets. It's driving our stuff, corn, beans, wheat, certainly the impact of the dollar. And like you say, near term, really not much of closure ahead.
No, there's not. And in fact, I think that it's going to be something that once we're through the Greek hurdle, then we have to go look at Portugal, and then we're going to have to tackle Italy. So it's nothing that's going to be
Italy's
resolved.
banks are issues again this week.
It's nothing that's going to be resolved anytime soon. So it's going to be hanging over the market for a while.
And like you say, I mean, the biggest impact is probably going to be a rising dollar, which is a headwind for agricultural exports.
Absolutely.
So we want to talk about that. But it's also wind at our back when it comes to oil. So we're going to talk about all those things. Let's get started. Let's talk wheat prices first and what you see happening there. I know you've been up in wheat country the last couple of days. I was down in Kansas City and talked to some folks on there. Feel like the U.S. crop's in decent shape, but there's big problems over in Eastern Europe.
Yeah, Ukraine crop is actually expected to be about 40% less, and so that's keeping the wheat market supported right now. A lot of the global marketplaces actually finally coming to the United States and asking for our product, which is a big thing. So wheat right now for July Chicago has a big hurdle to get above $7 price, but I think right now we're well supported, at least in the $6.50 area. The big picture would suggest $6. Something new that's developing, which is very interesting, is that some of the wheat producers in Texas, Oklahoma, and Kansas have been approached by dairy producers and livestock producers, and they've been asked, hey, would you be willing to consider chopping your wheat for silage? Now, if that happens, they can actually guarantee themselves $65 an acre of profit if they do that. And in order to get that kind of profit with wheat, you have to have 60 bushel average. So right now, a lot of wheat producers are thinking, well, it's pretty dry here, might have some opportunity to guarantee money. And then if that happens also, that's going to be 500,000 acres of wheat that go unharvested as far as wheat production. So that might keep that wheat market really well supported.
All right, that's a couple of interesting things. Like I say, weather in Eastern Europe and the situation of maybe chopping some wheat, which would be something we haven't seen much of. Now, price-wise, what's your strategy? What do you want to do? What should a producer do right now? And let's take somebody, let's say we've still got some old crop left and maybe thinking about pricing some new crop. Do you think we'll see that $7 again? Like you said, that's a pretty big lid on that market.
It is a big lid, but I think that over the next probably 3 to 5 weeks, we're going to continue to see the wheat market consolidate, and it's going to probably go back up and bump that $7 board price. And I think that if it does that, that is a great opportunity to get current on some sales for old crop, and then use that as your point to be thinking about what is the production and price doing for the next year, and use that as an opportunity to make some sales, small sales to get started, because there still is so much that could happen globally, but it's a good point to get started.
All right, let's move to corn. And obviously, old crop corn is incredibly tight. A lot of producers are holding on because we've seen this movie before, and the happy ending usually comes in July and August.
Right.
You think that's going to be the case this year on old crop?
I am actually quite favorable with the old crop corn. Right now we're going to see corn price, July corn futures especially, have $6 support and $6.75 resistance. And again, for the next 3 to 5 weeks, probably see the market edge and bounce back and forth. If it gets up to $6.75, make some sales. But if you do a swing objective on the chart, the upside points to $7.50 potentially, futures price, not $8, $7.50.
Okay.
And I think that that is a great place where people can unload a lot. But at this time, I don't know that there's any reason for the market to go higher than that.
What about new crop, though? You're hearing this big acreage number, less fuel being used. Is that going to hurt ethanol demand? I mean, there's a lot of stuff. They're very bearish. We haven't planted a seed yet. Everybody's bearish.
There are so many different scenarios that are going to be affecting the price of corn this year. Of course, weather and acres the biggest, and it's no secret that if all of those acres get planted, we've got the potential for ending stocks to just swell.
Yep.
Absolutely. The other factors, of course, as you mentioned, would be ethanol. And right now, of course, people are saying, well, the blender's credit has expired and there's actually some extra stockpiles of ethanol out there. Seasonally, this happens. This is normal because gasoline right now use is down, and that happens this time of year. But come spring and summer, the gasoline demand will actually, come up higher, and that's when the ethanol becomes used up again. The other factor that's going to be affecting the price of corn besides weather and acres is crude oil price. If Israel and Iran can't get their act together,
right,
that's going to be a big thing because that could really send crude oil $25 a barrel higher, and we'll get through that $100 resistance level easily. So we have to keep an eye on all of those possible scenarios, but most likely it is looking like the price of new crop corn going to be just consolidating for a little bit, but it's going to wait. It's not going to make its move until the planters get rolling.
All right. Do we make some sales now if we're nervous and we got a lot of overhead? Should we be making some safety sales now?
That's a great question. And I had that conversation with some growers in Northwest Iowa yesterday, and a lot of them told me that right now their break even is at $4.50. Based on where the new crop price is at right now, and even with basis, they can get $5.20 cash.
Yeah.
It's a profit. And absolutely, you should be doing something to get started because the old crop fundamentals and the new crop fundamentals are totally different.
The USDA report Thursday, the Argentine number, where they dropped it down to 23 million metric tons. I've talked to people who say it's 18. I mean, people that are on the ground in Argentina have told me it's 18. USDA is going to be slow dragging that number down. That tightens this old crop corn thing up even more, really, and potential carry out for new crop.
Absolutely, and it's one of those scenarios that's going to be one of the factors that could come in and be something that keeps the market supported overall so that we don't see that dramatic price lower. So we're going to see a lot of scenarios unfold over the next 2 or 3 months, and just be patient, but have a plan ready to go in case all of the factors come in to be the perfect storm to take those prices lower. But right now, I think we're going to see prices stay firm.
All right. Soybeans?
Soybeans right now with the old crop, there's nothing really to talk about. It's kind of a boring marketplace with, again, consolidation. But the new crop excites me, and it is because I think there could be the potential of a last bid for acres higher. And if you look at what's happening on a new crop chart with November beans, there's an inverted head and shoulders formation on there, which is actually suggesting $13.50 new crop price if the fundamentals can happen to justify to push it higher. So I think, though, that with the possibility of beans needing to buy those acres and with production down in South America a little bit and demand strong, we might see that happen.
Interesting. All right. So what's your scenario? Old crop, new crop sales. What are you going to do?
Old crop sales, I just encourage people to keep plugging along on those sales as prices have a chance to bounce a little bit higher. And on the new crop, what you really have to watch again is that $12.50 resistance area. If prices touch that point, be making some sales, it's a profit. But again, if prices can get through $12.50, be patient because there is a better path coming.
I was in Wisconsin a couple times last couple weeks. Corn Soy Expo had a blast. Up in Menominee a couple days ago. You're our Wisconsin connection. Tell us, what do you see with these milk prices? We had a pretty steep fall off here.
Oh, it's been a tough week for milk. And what happened is that with the mild temperatures, production is up. So therefore, all this extra production is going into the cheese plants. Cheese prices really come down the last couple weeks, and along with the whey price. The average 2012 price for milk, class 3 milk right now, is right around in the $16.40 area, and that is a huge support level. If that breaks because of production staying higher, and the USDA just said that they think it's going to stay higher, we're going to see that average price for 2012 go down to 16, which is break even for a lot of people.
Okay, kind of frustrating news there. But good weather is really driving it, which is I guess the flip side of it. We weren't scooping as much snow as we went out to milk the cows. Challenging winter on that front. And again, looking at some higher feed inputs as well for the dairy industry, which we kind of thought would soften up some now. Are you hedging anything right now on milk?
We have been.
Yep.
And so I think we're at the point of continuing to just implement what's already been in place.
All right. Milk cow numbers are going up. We talked earlier about the beef numbers being so tight and this cow herd being so tight, beef numbers being so tight. Well, we got a tremendous fed cattle market going right now, a tremendous feeder cattle market going right now. Is it going to continue in 2012?
Absolutely it is, and the reason is because, of course, those production numbers are so far down, historically low. The one surprise in the USDA report and the inventory report was that they increased heifers being held back for breeding by 1.4%. So what that means is that for the short term, the next year, there's not going to be a lot of supply for the marketplace for beef, but they are trying to rebuild the herd, and that's going to be coming up 2 years down the road. But in the meantime, that beef price is going to stay high. It's been high. It's going in at the retail sector. The price is up, and the choice value is up about 10% from a year ago. The select price is up 8% about a year ago, and that probably is going to continue on that path.
All right, and strong prices for calf prices as well. Okay, all right, some good news there on that front because they're facing some high input costs. Talk about the hog market. We've seen awful good export demand there for pork.
Yep, and that is expected to continue, very much so. The production, though, numbers are a little bit higher and the weights are up, so that's what's kind of keeping that cash price down lately. Overall, front month contracts have solid support in the 80 price area on the board, and the summer contracts have solid support at 90. I wouldn't be surprised to see the marketplace set back a little bit on a correction, but if it does, it's most likely a buying opportunity of a good support area, and it will probably see the price firm for a while yet.
All right. Absolutely great insights. Naomi Blohm, thank you so much. But that is going to wrap up this edition of Market to Market. If you'd like more information from Naomi on where these volatile markets just may be headed, visit the Market Plus page at our website. We'll also get to your Twitter comments and Facebook comments. You'll find expanded market analysis, audio podcasts, and of course, streaming video of our program and links to those Twitter feeds and Facebook page, all at the Market to Market website, and it's all free. Be sure to join us again next week when the Vice President of China visits the Heartland. So till then, thanks for watching. I'm Mark Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content.
Funding for Market to Market is provided by Pioneer Hybrid, which supports efforts to help families pass their farms into the hands of the next generation. Pioneer, science with service, delivering success.